Is there a maximum number of employees to apply? The answer is no. I'll address the minimum as well, because I think that might have been what this actual question is about. So basically, you have different rules for large employers versus small employers. And like I recommend in the presentation, if you've got a high head count within a company or within the portfolio of companies that's needing to be aggregated, there's a lot of special things that, the rules work differently for what's eligible wages. It gets significantly reduced. But the bigger issue with that is, well, how are you counting people? And there's special rules around, well, what counts as a employee for this, how part-time are they, how seasonal are they, et cetera. And so I just recommend, with the sheer volume of, when you're in those high head counts, that you really just need a professional doing that full assessment on your organization, and do not try to like DIY do that eligibility assessment yourself, just because I've seen people say, oh, well, the head count, it's 100 employees in 2019 and we had 120, so we don't qualify. And it's like, well, actually, when you do the testing correctly, you're only at 70 or you're only at 50, so you do qualify. So I would just say, don't even try to pre-qualify yourself on that one, but just know that it is different rules. The kind of bright lines is 100 and 500, but I would say, just if you're anywhere close to 100, just know that you're likely going to get caught into different rules, but that the program, you really should take the program seriously if you're at those high head counts, because you're now playing with life or death with $1 million tax credits. And that's something where you just need a professional assessment done. Now, on the flip side of that, the minimum number of employees, which I'm guessing this might have been what the real question was, because sometimes people see, in some of these companies that advertise, oh, you need at least 5 employees or 10 employees. It's not true. So basically, how it works is, once you have an eligible window, any eligible wages, and, referring to like what are, non-family members, non-PPP, the eligible wage base, any wages that are considered eligible are eligible for the credit. Now, are you going to file for a dollar tax credit and then have to amend income tax returns? Probably not, right? So it's a cost benefit analysis. And that's why I say, for most organizations, you definitely want to take this seriously if you were impacted very seriously and you have at least 5 employees, because that's where the cost benefit of doing the filings, doing the amendments, all the administrative burden starts to make sense. So it tends to be around 5, but that's not a limitation of the program. That's more a practicality limitation. So just know, the first dollar that you have of eligible wages is eligible for credit, but it's just when you consider amended income tax returns and then all the, fuss and muss that goes into these, you want it to be worth your while before pursuing it. And so that's why I usually say, it's when you're up above 5 employees, that's where you might want to consider having an assessment done. And especially if, when you look at your revenues, if you had some serious revenue hits, so you're qualifying in multiple quarters in 21, since that's where the bulk of the credit is, you'll definitely want to get it checked out. But if you only have, say government restrictions for 2 weeks with 4 employees, that's not going to yield you very much of a credit. So it's a facts and circumstances thing of the is it worth it analysis on these, but there is no, program enforced minimum. It's just practicality.